Good afternoon. Since the September meeting of the Monetary Policy Committee, it has become clear that COVID-19 infections will occur in waves of higher and lower intensity, caused in large part by pandemic fatigue and lapses in safety protocols. The virus is spreading rapidly in parts of North America and Europe, and hotspots have emerged in some parts of South Africa. While we have learned how to better manage the risks of transmission and the design of lockdowns, these waves of infection will continue for some time. Fresh spread of the virus and reimposed lockdowns will extend the time needed for economies to get back to pre-pandemic activity levels. Despite the welcome development in November of successful vaccine trials, global distribution of vaccines is likely to be slow, resulting in a modest pace of global economic growth in 2021. As expected, second quarter GDP outcomes for most economies were massively negative. Third quarter recoveries have generally been robust, and economies will continue to recover in the fourth quarter. The International Monetary Fund now expects global GDP to contract by about 4.4% this year. Although global GDP forecasts improved from September, it is probable that global growth will be revised somewhat in the coming months. While financial asset prices have been volatile for much of the year due to pandemic-related developments and geopolitical events, recent weeks have seen markets strengthen. Capital flows to emerging markets have generally picked up when compared to the outflows experienced in March and April, and global policy rates look set to remain accommodative. Nonetheless, pronounced levels of risk aversion are likely to persist through 2021, particularly where economies fail to grow or run large external imbalances, large fiscal deficits, and high debt levels. Locally, further easing of lockdowns restrictions has supported economic growth. High-frequency indicators continue to show a pick-up in economic activity during August and September. The bank's forecast of third quarter GDP growth has been revised up to 50.3% quarter-on-quarter, seasonally adjusted and annualized. The growth rate for the full year is now expected to be minus 8.0% compared to the contraction of 8.2% expected at the time of the September meeting. South Africa's terms of trade remain robust. Commodity export prices are high, while oil prices remain low. Getting back to pre-pandemic output levels, however, will take time. Sharply lower investment this year by both public and private sectors will weigh on growth prospects in coming years. GDP is now expected to grow by 3.5% in 2021 and by 2.4% in 2022. Overall, risks to the growth outlook are assessed to be balanced, but this is tentative and open to adjustment given the wide range of shocks hitting the economy, uncertainties involving the effectiveness of policy, and the sensitivity of sentiment to news flow. The somewhat stronger growth in 2020 and a small downward revision to growth in 2021 implies little change in the size of the output gap over the forecast period compared to the September meeting. The accommodative policies in many advanced economies and the improved economic outlook have supported a partial recovery in global financial markets. But this has so far resulted in only a trickle of fresh capital flows to emerging markets, and financing conditions remain uncertain. South Africa's high public financing needs have been met instead by local private sector savings and borrowing from international financial institutions. Yields have eased in recent months due to the higher purchases of sovereign bonds by resident investors, including banks, alongside SARB liquidity management operations. However, the yield curve remains exceptionally steep, reflecting elevated levels of risk associated with high borrowing needs. Better global economic and financial conditions saw the rand appreciate by 6.9% since the September meeting. The rand has, however, depreciated by 8.7% against the US dollar since January and remains below its estimated long-run equilibrium value. The implied starting point for the rand forecast is 16 rands 50 to the US dollar, compared with 16 rands 90 at the time of the previous meeting. The bank's headline consumer price inflation forecast averages 3.2% in 2020 and is slightly lower than previously forecast at 3.9% in 2021 and remains at 4.4% in 2022. The forecast for core inflation is lower at 3.3% in 2020, at 3.4% in 2021, and remains stable at 4% in 2022. The overall risks to the inflation outlook appear to be to the downside in the near term and balanced over the medium term. Global producer price inflation and oil prices remain low. Local food price inflation is expected to remain contained. The committee additionally notes the significant but likely temporary reduction in medical insurance price inflation for next year. Given low pass-through, risks to inflation from currency depreciation are expected to stay muted. However, additional exchange rate pressures could result from heightened fiscal risks. While there are no demand-side pressures evident, electricity and other administered prices remain a concern. Importantly, expectations of future inflation continued to moderate this year and have shifted slightly below the midpoint of the band for 2021. Market-based expectations for short and medium-term inflation have eased slightly, while longer-term inflation expectations remain higher. The committee notes that the slow recovery will keep inflation below the midpoint of the target range for this year and next, unless the risks outlined earlier materialize. Inflation is expected to be well contained over the medium term, remaining below but close to the midpoint in 2021 and 2022. Against this backdrop, the MPC decided to keep rates unchanged at 3.5% per annum. Two members of the committee preferred a 25 basis point cut and 3 preferred to hold rates at the current level. The implied policy rate path of the quarterly projection model indicates no further repo rate cuts in the near term and 2 increases of 25 basis points in the third and fourth quarters of 2021. Monetary policy has eased financial conditions and improved the resilience of households and firms to the economic implications of COVID-19 and continues to be accommodative. The bank has taken important steps to ensure adequate liquidity in domestic markets. Regulatory capital relief has also been provided, sustaining lending by financial institutions to households and firms. Monetary policy, however, cannot on its own improve the potential growth rate of the economy or reduce fiscal risks. These should be addressed by implementing prudent macroeconomic policies and structural reforms that lower costs generally and increase investment opportunities, potential growth, and job creation. Consistently aligning administered prices and productivity-adjusted wage settings with projected inflation would generate important macroeconomic gains. Such steps will enhance the effectiveness of monetary policy and its transmission to the broader economy. Economic and financial conditions are expected to remain volatile for the foreseeable future. In this highly uncertain environment, policy decisions will continue to be data-dependent and sensitive to the balance of risks to the outlook. The MPC will seek to look through temporary price shocks and focus on second-round effects. As usual, the repo rate projection from the QPM remains a broad policy guide, changing from meeting to meeting in response to new data and risks. This concludes the statement of the Monetary Policy Committee, and we would take the questions. They are being routed via Youth Raya.
We've got 4 questions from Reuters, Mfuneko Tuyana. He's got 3 questions. He asks about the US election and the outcome being favorable for emerging markets and the rand. Is it likely to sustain? And is it enough to further lower rates in the short term? The second question, also from Reuters, what input, if any, did the SARB give to President Ramaphosa's economic plan? Are there specific macroeconomic conditions that the SARB is tasked with looking after to make the plan feasible? And then the last one, given the extraordinary times, do you think it is useful to give explicit forward guidance about the direction of lending rates to decrease the degree of investor and local uncertainty? I have a question from Business Day, from Lucanio Mnyanda. It has been pointed out that the 3 calls swung on a single vote. Would a bigger monetary policy committee make policy more predictable? Any more views on increasing the members of the MPC? Those are the 4 questions I have so far.
Thank you very much. Funeko, US elections, they just took out what was an uncertainty, and I think that what you have is that it could have an impact on the extent of the fiscal stimulus provided to the US economy. And if the stimulus is provided and the US economy does respond adequately to, positively to that, a well-performing US economy is good for the world economy, given that that is the largest economy in the world. Clearly, this had led to a positive sentiment in the markets. Do we think that this would be sustained? The jury is still out, and I don't think that the markets just respond to what happens in the US. They respond to all sorts of events, and at the moment, I think high on the agenda, or high in the top of the minds of many investors, is what is going to be the impact of the second wave of infections that we have seen in the northern hemisphere. Have we had any input on President Ramaphosa's economic plan? No. Well, we do engage with the Minister of Finance as the bank. Now and then we also brief the President on economic developments, but we have not been asked to make any input into the economic recovery plan. Explicit forward guidance is a tool that is available that central banks could use. In our context, we have not quite used forward guidance. We didn't think that it is necessary at this stage. But should it become necessary that we have to guide the markets, we would do so. At the moment, the tools that we have are adequate. Lucanio, the committee swinging on the basis of one vote. if we had 7 members and 4 are for or against a particular decision and 3 are for or against another decision, you will still have 1 vote swinging it either way. The only worry that you would have is when you have got an even number, because when you have an even number, then the chair has got a casting vote. We're still searching for an additional member or 2 of the MPC. We thought that we had made progress. We had a disappointment at the very last moment, but it is something that we would continue to work on.
Thank you, Governor. I've got a question from Lamiz Umarji, News 24. To what degree, if at all, did the MPC consider the upcoming ratings decisions? Then I've got a question from Bloomberg. It's Pranesha Naidu. There are a couple from her. The QPM suggests rate hikes will take effect next year. What signs will the MPC look for to gauge when that would be appropriate? A second question around GDP. You've raised the 2020 GDP forecast. Why? Another one, my word, there are quite a few. How do stricter lockdowns in Europe and the threat of a second wave of local infections factor into that? That relates to the 2020 GDP forecast. Also, how optimistic are you about the prospect of the vaccine trials? Would it be a game changer, and how have you adjusted your forecast accordingly? And then a question also still from Bloomberg related to the ratings agencies. Rating decisions are due by Moody's and S&P tomorrow. How has your interaction with the companies been? What have they raised as a concern or concerns, and what are they satisfied with? Thank you.
Thank you, Lamiz. I think I'll take your question together with the 2 questions from Pranesh, from Bloomberg on the ratings, and say that yes, indeed, there are supposed to be announcements of ratings decisions on Friday. They might decide not to announce anything, by the way, and to wait. Our interaction with them had been that the Treasury sets meetings and we engaged with them. What concerns they have? Well, we can tell you that they do not have any concerns with respect to the South African Reserve Bank and its policy stance. And normally our meetings with them these days are very short because the interactions are such that they do not seem to have any concerns either with our approach to regulation of the financial sector, neither do they express any concerns about the monetary policy stance and those things. Have we factored the decisions into our decision, our MPC decision? It's difficult to do so because we don't know what the decision is. So we will just take it as an event risk should a decision come that affects the markets. Why higher GDP? We have seen that high-frequency indicators point to higher economic activity. We have seen it in mining. We have seen it in manufacturing. We have seen it in retail. There is a range of high-frequency economic indicators that suggest indeed that the outcome for the third quarter is going to be robust. It is not that it is a purely South African phenomenon. It's what we are seeing around the world. A word of caution is that statistically, you must know that whilst we are talking of a 50% growth quarter-on-quarter seasonally adjusted and annualized, the base from which we are coming from is very low. And it is exactly the same thing that we cautioned people when the second figure was released, that it was coming from a base that was high. And so when that figure came out, it then was so pronounced. And now this time round, we are going to have a third quarter figure that is coming from a very low base of the second and the first quarter. And so that is what you are actually seeing from that figure statistically. And what do we see as the impact of the higher infections in the north and what we are seeing domestically? The jury is out. What we have seen in Europe, though, is that there are countries that had gone into lockdown, and amongst those countries are our important trading partners, such as the UK. And if they are in lockdown, that means that trade between us and Europe is going to be affected, and so that will water down on GDP growth going forward. And it is one of the reasons why we had revised growth. We think that the fourth quarter this year will be lower than what we thought it would be at the time of the September meetings. Prospects of a vaccine, I am not a vaccinologist, but if the trials are anything to go by and the vaccine does become generally available, then it would be good news for the world, because it would mean that you could arrest the spread of the virus with the attendant economic benefits from there.
I've got a question from Larry Claassen, MoneyWeb. What will have to happen in the economy for the MPC to cut rates? And then Gabrielle Steinhauser from the Wall Street Journal. How concerned are you about the prospects of a pronounced two-track recovery due to countries like South Africa getting vaccines much later than the US and Europe? What would this mean for monetary policy? Those are the questions I have.
Well, the two-track recovery, I've dealt with the issue of the vaccine. I don't think that there is much to add to that. Larry, what would it take for the MPC to cut rates? We have been cutting rates since January this year. We took a breather in September and now. As we said, that we will continue to assess data, and any future decisions of the MPC will be data dependent, cognizant of the balance of risks, and based on that and what we see as the evolving economic outlook, we will adjust policy as we deem necessary.
Those are the questions, Governor. Thank you.
Are there other members of the MPC? Do they have anything to add? Nothing. Okay, thank you very much. That concludes the business of today. Attached to the MPC statement is also a list of the dates for the MPC meetings for next year. Otherwise, stay safe, practice social distancing, wash your hands, wear your mask, and have a Merry Christmas and a Happy New Year. See you in January.